Well. Good morning, everyone. Good morning. And that was the begin. It was a great conversation we were having with Garrett a moment ago. I assume you guys were in there, or many of you were in there. But I got cut off. I got throttled by Google because I was talking negatively. And these guys probably like turned off my Canadian internet or something like that. They're like, you know what? Um, no more internet for you, like the soup nutsy from Seinfeld. No more soup for you. And so here we are, but I am back. They cannot keep us down here at Option Pit. So welcome back. Before we start, everyone, stick around because Lisa is going to have something really exciting for you. I'm going to bring her on in a bit. But after the show, you're going to want to hear it. So don't go anywhere when we wrap. We've got a nice schedule of things for you over the next hour or so. Now, let's take a look here. So there's some really important stuff going on. We talked about it a little bit with Garrett a moment ago. And I talked about, which I can show you in a moment, I talked about my rotation zone and I talked about my higher correlation zone. And these are very, very important things. And it is actually working to a T. I started to talk about this about a week ago, and I said, these are the two areas, and you're seeing the VIX react. So Google reported the numbers were in places incredible, right? But the stock's down. It's getting smoked again. In fact, it's down, what is it, down another 7 or 8%, and it's down over 20% from the high. So you guys remember when Google was the undisputed world champion of AI? And I was kind of pretty much a lot, I was thinking the same thing. And this really gives you an idea of how quickly things can change, right? When a startup in China that's a couple of years old, 2-3 years old, on a relative to what these guys are spending on a shoestring budget, comes out with an incredible model. Sure, they're called distillation. They're stealing. And I said to Garrett, I said, well, join the club, right? It's funny, Anthropic, it was saying something about, oh, they're just stealing things. They're stealing what we're doing and this and that. That's pretty rich coming from companies that basically steal everything, right? To train their model. So, no judgment for anybody, but listen, you're all in the same club here. So all's fair in love and war in the AI game. And so everyone's going, well, Google's not going to slow down spending. In fact, they're going to pick up. They're going to actually ratchet up spending. And what does that mean for the rest of the hyperscalers? So let's take a look at, because people are starting to wonder, where the heck is all this money going? I'll tell you where it's going. It's going into compute, right? So what we're not going to have enough of, as I've been talking about, is compute, right? So we need, and that's why the memory stocks. What have I been saying lately? I've been saying memory stocks, storage stocks, and equipment names. These are the things that people are going to have to buy. There's just you bring in cheap Chinese models, what's going to happen? You're going to have cheaper, more accessible internet AI to the world, and that's going to just ramp up the demand for it. So look at the QQQs here. I'm going to show you my two demands.
When we lost you, we also lost your screen. Here.
Oh, you did? Okay, let me try again. Sorry, guys. I'm going to try to get my screen back here. Toggle screen sharing, yes.
No, you're going to need to refresh it. That one where you're there.
Oh, okay. It's all about the refresh. Okay. Let's do this then. There's my screen because I got to show you guys this chart. This is very, very important. So, have you got it there?
No. Just jump on the second link again and start it again.
All right. Sorry about this, guys. Screen share. We are now getting close to the correlation zone. And this is what I really, really want everyone to understand. I'm not massively worried, but I also am a believer that you argue with the chart at your own peril, right? At your own peril. Have you got it there, Amin?
No.
Because I'm trying to share it. All right, I'll try one more time. Toggle screen sharing. I'm toggling. I know how to toggle, but
let's try this one.
Okay.
The last one I just sent you.
Here we go. No. Oh, but I see it on. I see it on the screen right now. You don't see it?
No.
All right. Stop sharing and sharing. How's that?
All right. Yeah, this works. All right.
Back in business? Okay. Okay. Let me know when the viewers can see that.
We're good.
You guys, okay, great. So here's Hughes, right? And so the different story. So I was just saying to Garrett, it's actually extraordinary that the Goldman Sachs asset. Okay.
We're
All right,
dropping
I'll assume
some
you
connection.
can. So
we're dropping
the
your connection a little bit,
Goldman
Hans,
Sachs
but we have you.
But you can see it.
Yeah, we can see it. We're good for now.
Okay. So here's your SPY, basically highs, which is extraordinary to have a 35 to 40% sell off, yet still have the broad, what we call sort of the more diversified index outside of the Dow, but really the big enchilada really trading near all-time highs, and so that's kind of the broadening theme. And so we've talked about this before, which is really this chart here, right? So you can see that more stocks are rising on down days than we've seen in the last 20 years, basically. So these are stocks rising down days in the S&P. And so that's broadening, right? So this is really what you're seeing is that play out, S&P okay. But let's take a look at the Nasdaq. It kind of holds the key to a lot of what we're talking about over time, which is AI, right? It's more the builders, it's more the memory stocks. It's of course, it's the Mag 7. It's got a heavy weighting in there as compared to the SPY, which is heavy enough. But look at what we've got here. So we had this incredible rally back, and we had this beautiful pennant pattern playing out. We broke down. I'm gonna maximize this a little bit. We broke down. We rallied right back up, absolutely like clockwork, to the 9 in line, I call it, the 9 in line, TM. So that's the 9 EMA and the line that we had drawn here, and we've rejected, right? Yesterday we tried again, we rejected. We're down on not down on memory and storage. Those are doing well because we're now in a world of infinite build-out compute demand. For compute demand. So this is a new story because of these Chinese models. But look at the rejection we have here. And so what I've been saying is, listen, in here above 700, 705, you're in the rotation zone. We get rotation. It's very orderly. You get sort of everyone playing nice. And we see something that doesn't get people excited, which is why VIX has been down around 16. I said, once we get down below 695, 690, then we start getting into the correlation zone. That's where if something breaks and gets a little uglier, I don't think that'll happen because I think the broadening is so strong. And you can see we're doing well, even with MAG doing poorly, even with that sell-off in memory, last week. So I don't foresee that. But what we are seeing is that the MAG, which so much of the world owns, is now pulling back. And I think that's a little bit of a concern. And result, you're seeing the bump. So look at this here. Look at this. Beautiful. We break down. The VIX pops up because we were back in around 680, 690. And that's the correlation zone where things start to correlate more off, right? So we know that in bad sell-offs, they've got to sell stuff that they've even made money on because they're paying for things that aren't worth, right? That's a liquid, that hints at more liquidity type activity as opposed to rotation, that orderly rotation. NASDAQ bounced back, the Q's back. We pull back in the VIX perfectly. You can't chart the VIX. We pull back perfectly yesterday. We closed right on that line, and boom, we pull back from the 9 in line in the Q's, and now we have a bounce back up in the VIX. So now we're in the correlation zone, and the VIX is an animal in a world of dispersion, which means lots of stocks going in one direction, lots going in another, which is really part of that rotation. We haven't seen this level of dispersion in decades, really. And this is the of something like a VIX. So the VIX is really, it's not helping you hedge against semiconductors. It's not really helping you hedge against anything in particular because the S&P is not doing anything. If we clear in the Qs and we do get a little follow through on the side, then that's where you're going to see to reflect a broader concern. So that's really what I wanted to kind of start with today, because I think that's really, really important. So let's take a look again. We've talked about our two little zones. That's what I want you to watch. We get down below QQQ 685. That's where things get a little bit more nervous, and you're going to probably see a VIX 20, maybe a 20 plus, and then that's where, you know, maybe everybody starts to wake up and take notice of a market that is less healthy than it was before. Because right now, we just talked about it with Garrett. He said, listen, this is basically, this tech move is getting super narrow. Now they're hitting the mags. I mean, not so much Apple, which is one of my favorite stocks of the year, but they're hitting everything else. And so it's starting to get to the point where we literally are about memory storage and maybe some of the little pieces that around that story, like photonics. I think that's really what we've got here. So let's go through this. Leisha on. Actually, bring Leisha in, Amin, because we want to talk. We've kind of gone a little bit long here. Here's your cash flow. This is what people are worried about, not happy. Here's your Kimi model. I'm going to make this. Oh, I can't make it bigger. So here's your Kimi model outperforming Claude and GPT and all these guys. Okay, this is kind of embarrassing. It's actually kind of getting to the point where it's embarrassing. And so it really is about the stocks that are getting paid and the stocks that are carried. So this is what the market is starting to worry about, is that when will this spend end? Man, I'm on fire today with things that rhyme. When will the spend end? And the 9 in line... the 9 in, tell me about the 9 in line. What do you think of the Qs right here? Because you're the queen of the candlesticks and the chart. What do you think of that?
You're cracking me up, Hans. Every time I'm on with you, I laugh. You know what we saw the last 2 days. I mean, if you don't mind showing my Q chart, we were breaking down, hit support. You know, rally, kind of a doji confusion day here, and then, oh, not so fast, we aren't going to rally. Oh, and then, oh, yes, we are. The buyers have returned. This right here, the last 2 days before today, this is called a bull trap. We have our trend line. People are seeing that. It came back above all these lows. That is a bull trap. It's easy to get caught up, right? We crossed the trend line, and now, oh, not so fast. We are going lower. So we have to watch. The bottom of the channel comes in 690 half, 690 and 50 cents. Below that is our low, most recent low of last Friday, 686.59. So yeah, looking lower. After those bulls were trapped up there.
It's really extraordinary what's happening, Leisha, if you really think about it. Like, the MAG are so out suddenly. Look at Google down $25. I mean, I talked about it earlier. These were the undisputed, you think of like wrestling, they've got the big belt, the undisputed champion of AI. They've got all these spokes, all these different ways to make money. They've got YouTube, they've got cloud, they've got the best model in the world. Suddenly things change. And I think it's really kind of a lesson for us. We've talked about it over the last year, how this is the ultimate age of disruption. And just when you think somebody is far and away the leader, suddenly things change very quickly. So it is just it's quite amazing to see. And it's not that Google isn't doing well. It's they are doing well. Their cloud numbers were great. They're doing well. It's just that investors are getting tired of the spend, and they're wondering when is the Google said they're going to spend even more. So basically that pushes out for anybody who is hopeful that maybe there would be just a little bit of fiscal responsibility in some way, that now this almost pushes it out to end of 2027, maybe 2028. These guys are saying we're just going to keep on going. And it's not that it's a bad stock, but sometimes as traders and investors, we have to think of things as dead money or money in play. And so the problem is, at this point, if they all say that next week, it's kind of dead money because the free cash flow is being spent. Google's now gone negative. Amazon's already negative, and they're spending more than anybody. The investing public is getting impatient, and when they see a model out of China that is almost as good, okay, it's not as efficient. You need more tokens, but that's going to see that thing outperforming, and they're going to be asking these companies, what the heck are you spending all this money on?
Also, the money you're spending could be going into my dividend. Amazon doesn't pay a dividend. Google's dividend's 22 cents.
Right.
Where's the return on my owning stock?
Where are the buybacks? Well, yeah, guess what? When you have no free cash flow anymore, the buybacks, remember for years and years, it was these guys just keep buying back their stock. And then what was also concerning from Google was they basically indicated that this big, massive equity sale that they're going to be doing, they haven't really done very much of it. They've done some of it, but there's a whole bunch more stock to come. So that's on a regular basis, like clockwork. They're going to be, a certain percentage of the float over the next however many months. It is just not good news after not good news for companies that are incredibly powerful. They are leaders in many ways, but I think they're kind of a little bit confused. Now, I think a big part of the spend is compute. And so what we know is that these Chinese models are basically going to lead to everybody using more AI, needing more tokens. That's why Micron's doing well. It's up $40 as everything else gets hammered, because we're going to need more compute capacity. So these guys are going, well, we have no choice. We've got to expand our compute. Otherwise, at some point, we're going to have to tell customers, sorry, we're out. It's like going to the gas station and you're like, I need to fill up my car. And the guy goes, oh yeah, we're out of gas. And so that's the problem. This is going to be a very constrained world, and the market is focusing more and more on those physical constraints, like memory and things like that.
Amazing. And I feel like only a small percentage of people worldwide even that understand the whole darn thing, right? I mean, you're very, very well-versed and are able to explain it to all us much more than I admit I am. It's a lot. It's a changing world, and it's a lot to keep up with. It's changing too quickly.
I try, Alicia. I run my own distillation in my brain. I try to figure out what the broader sort of trend is, and that's kind of how. I'm always trying to where are the tail, where the headwind, the scarce, where's the abundance. Where are things basically have to happen, and I know that whether running compute in China or here or Brazil, and we're going to need more of certain things. And I think that's really, but it is becoming very narrow. So I think QQQ, as I said earlier, those are my zones. We're now out of the rotation zone. I think we do have a good chance to get back into the 700s. But if we get lower and we have a bad close, I think it's difficult, because I do believe a lot of people in the world own the Mag 7. So don't underestimate how important those are to portfolios. They're in everything, right? They're in how many ETFs are these guys? Everything.
Sure.
All right. Anyway, we've gone on and on, Alicia. Sorry,
that's okay.
I went on and on I meant to bring you on earlier, but everyone, don't go anywhere, because Alicia is here to continue her reign as the queen and present to you guys all the wonderful things she's seeing. Nobody reads it, Alicia does, and I am looking forward to it. So and every day, 10 a.m., Garrett, one of the wonderful traders, Mark, myself, Tim, Leisha, Andrew, we're going to be here to fill you guys in on what's going on out there. And for now, I'm gonna send it over to you, Leisha, and I can't wait to see what you've got cooking.
Thanks so much, Hans. And honestly, thank you for all your hard work, keeping up with all that and relaying it back to us. All of us here, our members, I know we all really, truly appreciate it. So with that, see you later, Hans. I would like to talk about two kinds of traders we have here at Option Pit. Those that take the trade alerts and just click buy on the offer, sell on the bid, just following their instructions. And then the second type, the person or people that actually want to learn how to trade. Today, I'm going to show you that difference. Not because one group is better than the other, but because if you want to be in that second group, I'm about to give you the first real step to get there. I'm going to say this up front. What I'm about to walk you through is not for everyone. Not everyone is going to want to do all this, but that's okay. Stick around anyway, because even if you never trade a single option on your own, you're going to walk away from today with something free that makes you better at reading the market and the charts. And just for showing up today, I put this together for you. A free guide instructing you how to draw trend lines. It shows you where they come from, how I lean on them every single day in my own trading, and exactly how to draw them yourself on your own charting platform. I built this because it is my step one. This is the very first tool we use in my service, what I use on my trading when I pull up a chart for the very first time. In a very short time of practicing, this will be the first thing you notice when you pull up a chart for the first time. Let me show you how it works. Very simple. Here is a new stock, brand new stock, just started trading on May 14th. We don't have anything on there. We have a couple moving averages. Where is this stock going? Let's take a look. First thing we notice, the high of the all-time high. Well, the all-time high was intraday. It opened here and closed here. The real body's more important. The stock manages to trade back up in that direction. That is going to be resistance. The other thing we notice, where are the buyers lying? The buyers are sitting down here at 173.91. Each time the stock trades down here, the buyers arrive and show up and start buying. What else? More recently, closing in on more recently on this chart, we see where the more recent sellers are. They're right around there. Ever since it traded back below here on June 23rd, the stock has not been able to trade over 221.08. Lastly, what's the trend been, right? That's probably actually the first thing you see, but the trend has been down until each time it hit that lower support level where the buyers are hanging out. Let's draw that downtrend line, say from here. As you can see, actually this trend line goes back to here. As you can see from going back to May 28th, over a month, so pretty good time frame. Each time the stock hit that downtrend line, it honored it, it reversed. That is a very valid trend line. It is a guideline. It is telling you the stock is making lower highs. The sellers are in force, representing more than the buyers are at this point. Then what do we get? We get Tuesday's candle breaking out over that trend line. Your alert is going on. Oh, the buyers are taking off over here. They are clearing that trend line. This is a signal I can go long. I can buy calls here. Sure enough, next day, the stock was up all the way up to the high was 244 on the day. Closed at 210. that stock rallied 34 bucks just by clearing that little mini downtrend there. Lots of information, just using trend lines, Super easy. All it takes is practice, and you will be able to use them yourself. And we use them to enter new trading opportunities, as I just showed you in CBRS. We also use them on the 5-minute so that you're not just running in and buying that offer, or when you're into a position, just running in and sell that bid. That's extra money that is going to be in your account when you make those smarter entry and exits. Those trend lines are going to help you do that on your 5-minute chart. So really all of this is a preview of something bigger. I actually have the chills. I swear I have the chills. That's so crazy. That wasn't planned because I can't force chills, but I literally have the chills. I want to tell you what's got me really excited right now. The SIBO just opened up a bigger playing field for the kind of trading I do, and it's just the beginning. The SIBO has been steadily adding more stocks and ETFs to their Monday and Wednesday expiration lineup. Oh my gosh, chills again, guys. Can you get that on the camera? Totally. This matters because it means more names now have options that expire the next day. That's exactly what we're trading, those 1 DTE overnight opportunities. Just last week, the SIBO added AMD, Intel, Micron, the financial sector ETF XLF, and the big one, the semiconductor ETF SMH. Guys, SMH has been leading this market direction for at least the last week. Those semiconductors, this is a huge one for us to be watching. All those names are on top of the ones that we're already trading. NVIDIA, Tesla, Apple, Amazon, Google, Meta, Microsoft. There's a whole slew of them. What this means for us is simple. The pool where we get to go fishing just expanded. It's gotten bigger. More liquid names, more short-dated options, more chances to catch a clean overnight setup, capturing that gap the next morning. This is tremendous. Every quarter, the SIBO is going to continue to add at least 5 names to the list of their Monday and Wednesday expirations. The next thing that has given me chills again, let me tell you about the tilt. So every single day, options on a stock lean in one direction. It's not random. You can actually see it. The call volume versus the put volume versus the total volume. Where the size is trading. How price is reacting around these key levels. We call this the tilt. It's the market quietly letting us know which way it expects to move the next morning. So after analyzing our charts for direction, I look at this one specific number before I even place my trade. Soon enough, my members of Project Next will have access to this number too. The system derives a single score from each one of our stocks trading volume that day. We're calling it the tilt score. Let me show you what it looks like. And here it is. Our list of stocks that have the Monday, Wednesday expirations are listed here. Our expiration date. We do have the last sale price. We have a lean of calls traded, puts traded. We have the grand total, put volume, call volume, and grand total volume. And that spits out our tilt score. Now, studying this, we have learned there's a particular range of tilt scores that lean bullish on the stock opening higher the next day. And there's a particular range on the downside of the stock leaning bearish and opening lower on the next day. So after determining what our charts are telling us, we go and look at our tilt score. The combination of those two have given us winning trades. You don't need 20 years on the trading floor to start seeing this. You need to know where to look. And now you do. Once again, I'm reminding you, this is not for every trader. This is for the traders that want to learn and gain the confidence to make their own trade ideas, to put on that option trade with confidence without anyone else making the trade. Best part is you're sharing it in chat. Maybe you get someone else saying, oh, I like that. I think that's a great idea. Lots of opportunities. You'll learn how to do all this as a Project Next member. Now, let me walk you through our entire process. Tuesday afternoon, we were looking at the charts, and gold futures was one of our favorite charts to trade higher, and let me show you why. And guess what? It was a trend line. It was a trend line. Gave us the signal. Here are the gold futures. Trading in those ranges. Here are the buyers. Here are the sellers. And guess what? Here on Tuesday, nice big bullish candle, approaching resistance there at these highs. My pitchfork resistance, the 20-day moving average. This is showing us the gold futures are gaining that momentum to pop back over all that resistance. And this is where we bought our GLD options. GLD is the ETF that follows the gold futures. I sent this order, buy to open GLD. I tell you exactly the stock ticker, the date of expiration, the strike price, call or put. Also in my trade alert, I give you a trading range. Pay 130, but don't pay more than 145. We don't want to chase it. On top of that, my members know how to read that 5-minute chart because they know they're using those trend lines. They're using them on their 5-minute. At the time I sent this, and you'll notice it was at 3:39 in the afternoon because as the day progresses, the options that are going to expire the following day are just decaying and melting. And that's where we find the cheap options we want to hop into, taking us in the direction our tilt and our chart has told us it's going. So I added a little note. Watch your 5-minute. Don't be the guy that runs in and pays that offer because GLD is ticking lower. You don't want to buy it here and it's still ticking lower because you were buying calls. Wait for the price to reveal itself. Wait for that little turnaround. Yeah, you might pay 3 cents more, a nickel more, a dime more. It's okay. It's worth it to be right than to pay less and be wrong. So I said, watch that 5-minute, let the price reveal itself, and then hop into your calls. I waited my 5 minutes. Every time we send a trade alert here at Option Pit, we have to wait 5 minutes before we can enter our trade. Usually we get worse fills due to that, and our members do much better, but that's okay. I filled at 145. After every trade I send you, we're looking for that movement the next morning. By 9:15 the next morning, I will send you the trade plan for the day, what we're going to do. And we have the opening indicators where the stocks are looking to open. And on Wednesday morning, gold futures were trading higher. I said GLD is looking up $3, which it was. And the futures chart, they had traded right up to our price target. That's another thing our trend lines give us, price targets. And then they pulled back a little bit. I paid 145. I have to do my due diligence as a trader here leading you. I'm going to take my 100%. I'm going to offer my calls out at $3. Well, within that 15 minutes from 9:15 to 9:30, the GLD was up another $1. I ended up selling my calls at $4 for a 175% profit. That's not the best part. It's awesome, but that is not the best part. My members watching that 5-minute chart. So here's what it did on the daily. We bought here in the afternoon, literally 20 minutes left in the day. And here's what GLD or gold, the futures did the next day. Here's what GLD did. Here's Tuesday, and there's our pop Wednesday. Look at that, guys. Traded right to our trend line. And actually, I didn't even realize it. Traded right to our trend line. That's how good they are. That's how good they are. You'll also learn about bullish engulfing here, and this is bottoming and all kinds of fantastic things. So here's Wednesday morning's gap on GLD. I got to take the money. I'm up 100%. I got even more. $3 was 100%. $4, I got to take it. I got to do my, be smart and take the money when it's on the table. My members, though, I have the chills again. My members literally watched this tick higher. And look how well they did. Vicky, I sold at 4. Vicky sold at 5. She made 244%. I made 175%. EP, he sold at 523. Dave S., he made 208% on the same exact trade. Ahmed, I think Ahmed gets the trophy, the pity of the day. He sold half, not sure what level, but then he sold his balance right near the very high tick of the day, $6.50. Unbelievable. Jose, 191% on a 2-lot, more than I did. Michael Mick, 199%. He sold at 4.25. I sold at 4. And Harry Lopez, and it's 145 out of 508. That, my friend, that is the best part. That also gives me the chills. It is awesome. So now that I've walked you through the trade, I would like to sum it all up. The trend line guide you are receiving today just for being here is step 1. You're learning to see the direction. You're learning to see where a stock may stop and turn around, honoring those trend lines. The tilt is step 2. Learn to read the options markets and their volumes, telling us what direction they're looking for that next morning. The tilt gives us that. Project Next, that's our 3rd step. This is where I do the work every Tuesday and Thursday with you live. I hand you the exact trade, the ticker, the strike, the entry price range, and our profit target, our price target where we think the stock is going to. Then the following morning, 15 minutes before the opening, we have a clue as to where the stock is opening. I send you the trade plan. And I send you levels to watch on your 5-minute trailing stop loss. I am in the chat talking about it throughout the whole time until we exit. And then also included all that, we have a lesson every week so that you are finding the cheapest option on the board, candles, charting, pitchforks, everything. Everything I know I teach you. Today at 2:30, I would love for you to join us. We have fun. We look at all these charts. Thursdays are extra special because guess what? Every stock has options expiring tomorrow, Friday. So we always like to say Thursdays the world is our oyster because we don't just have that list of Monday, Wednesdays, which we love on Tuesdays, but we have the entire options stocks, all stocks. So looking at becoming a Project Next member. For 1 year, you can spend $19.99. If you want to be that guy or gal that learns how to trade for yourself, feeling confident to click that enter button to buy your option on your own. 2 years gives you the learning, the time, and it's a lot less per year at $29.99. Now, tap the button above me. I don't see it, but I think you do. To lock in your spot. Now, I am reminding you, I meant what I said earlier. This may not be for everyone, and I get that. People make money just following the trade alerts. It's great because we have great traders here at Option Pit. But if you're that person and you're happy just taking the alerts, that's fine. But if you want to learn to take that leap, become your best trader, become a professional trader, learn how to read the charts, learn how to use the tilt score, trade with us every week. You want to be a Project Next member, get into our chat room, come and join us. Either way, you get the free trendline guide. Please use it. It can only help you. It'll help your trading, reading a chart. No matter what you decide today, you will get that. But if you're ready for the next step, I'll see you inside Project Next today at 2:30. Thanks, everyone. Thank you, Amin. I will see you all at 2:30.